Good morning and a very warm welcome. You're watching Mirror Now with me, Pooja Rajput. Our top focus, the key takeaways from the RBI briefing. As countries across the world make a recovery from the multiple COVID waves, escalating war in the Europe is now making an impact on the economy. Indian Central Bank also acknowledged this as it maintained an accommodative stance. RBI announced that both the key interest rates remain unchanged. Repo rate remains steady at 4%, while the reverse repo rate is unchanged at 3.35%.
The Monetary Policy Committee, that is MPC, met on 6th, 7th and 8th April, and based on an assessment of the macroeconomic situation and the outlook, voted unanimously to keep the policy repo rate unchanged at 4%. The MPC also decided unanimously to remain accommodative while focusing on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. Inflation is now projected to be higher and growth lower than the assessment during February. Economic activity, although recovering, is barely above its pre-pandemic level. Against this backdrop, the MPC decided to retain the repo rate at 4%. It also decided to remain accommodative while focusing on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth.
And I'm being joined by Hina live, who's reporting from the national capital. Hina, just for the benefit of all our viewers, if you could just give us a lowdown of the top key takeaways from this RBI briefing.
Well, it was an important RBI briefing today, and as you spoke about the top takeaways, then one of them is that the RBI this time also, 11th time in fact, has decided to keep the key interest rates unchanged, which simply means that our EMIs neither will get expensive nor will get cheaper. Now, this is what most of the economists had expected. Takeaway number two is that looking at the current geopolitical situation, the war-like situation that we are seeing in Europe right now, the Reserve Bank of India feels that the growth target for this year at 7.8% will not be met, and hence the growth target for FY23 has been slashed to 7.2%. Now, already we are seeing a surge in inflation levels because of the surge in crude oil prices because of the situation in Ukraine. As a result, the Reserve Bank of India has increased its inflation target also to about 5.7% for the current financial year. It has also given us a direction about how RBI is looking at things from here on. So the Reserve Bank of India governor very, very clearly said no action is off the table when the need of the hour will be to stabilize the economy. And clearly the economic recovery is happening, but it's still not at the level seen before March 2020. That was the message that the RBI governor gave us. Sharp pump prices may push inflation further. We are seeing fuel prices getting increased every single day, and renewed COVID infections that we are also seeing in some parts of the world actually could pose a downside risk to growth in our country. So these are the two things RBI is going to be monitoring very, very carefully, and the benefits that Indian economies started to see post the third wave of COVID pandemic, they are not enough right now because this was offset by escalation in the geopolitical tension. So that was analysis of the state of the economy by the Reserve Bank of India. But the bottom line is that the growth this year is going to be slightly lower than what the RBI had expected earlier. Brace for higher inflation level. Things will continue to get expensive as long as the crisis in Ukraine is going to continue. But at the same time, there was a clear message from the RBI governor as well that if need be, then anything and everything that will be possible will be done by the RBI to help the economic recovery.
Hina, thank you so much for all those updates. Just one short question here. If you could just very briefly state the key impact of these key announcements made by the RBI, how it impacts the common man.
Well, if you have a home loan, then nothing is going to change for you. Usually, when we look at rates in the RBI policy, whenever it happens, if the rates are increased, then our EMIs go up, or the money or the interest that we earn from our deposits, the money that we put in our bank accounts, that goes up. But because the Reserve Bank of India has not changed the interest rates, it simply means for the middle class, for you and me, for people who are watching us right now, there's going to be no change in the interest rates for us, the rates or the EMI that we pay. Second important announcement was that also might interest some people. Cashless card withdrawal is now going to be allowed across all banks in the country. Right now, it was limited to just a handful of banks, but now it's going to be allowed across the country. So that's something that people might be interested in. That was also announced by the Reserve Bank Governor today.
Thank you so much, Hina. Thank you for all those key updates.